What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I also apologize about any background noise if you hear in this video. I want to record this as fast as possible, release this as soon as possible because I have some very important things to discuss in this video about the FOMC meeting, what Powell just said, and how this will affect Tesla going forward. Now, before I break anything down and talk about the key levels to watch on Tesla and what Jerome Powell just said, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks can be a free Tesla share. It's a limited time offer. The offer ends in just a week, so check it out before they run out. With that out of the way, let's get on with the video. So look at the market right now. We did see the VIX actually close kind of green, and overall Tesla did end up taking a big hit. So did the SPY, the NASDAQ, the QQQ, and Apple's, and many other stocks out there. So what happened today? Why did the market react this way? I mentioned yesterday that the FOMC meeting is going to be a very huge market mover event. And what happened was, when the FOMC meeting started, all right, you know how the market loves certainty. Well, the 75 basis point rate hike was announced immediately at 2 o'clock p.m. Eastern time. The market rallied off that. We were holding up pretty well. But then Jerome Powell started talking, and that did cause the market to start dropping. And he said some very telling things about the future of the Fed's policies. And this did cause the market to end up dropping to the downside pretty hard, actually. So in my previous video, I mentioned that when Powell talks, the market's going to likely come down. But where we move near the end of the day is going to depend on what he says. I mentioned that we could end up coming down on Tesla, or we could push up very hard. I was a little bit biased in saying that we could push up a bit because of midterm elections. We know the market tends to be very manipulated during that time because of midterm tape, and because of the fact that it wouldn't be good for the incumbent party if the market ends up crashing or taking a big hit going into midterms. And so far, that is what's happening. So it's not necessarily looking good for them, if I'm going to be blunt when saying that. So anyways, I want to now talk about what Powell said and how this may affect the markets going forward. Firstly, when it comes to the whole outlook of the Fed, when it comes to the December meeting, the market was basically ready for 50 basis points, but we haven't fully priced in 75 basis points for December. Now, Powell gave no indication on what they're going to do about this just yet, but he did mention some things that are pretty hawkish. So what I essentially did was I listened to Powell with my own ears, and I actually noted down his big points. So there are lots of articles out there. There are lots of videos coming out that don't actually talk about everything he explicitly said. They tend to just talk about one of his big points here and there. What I'm doing that's different is I actually listened to what he said, and I'm going to give you guys his actual kind of quotes and his big points from my own ears. Anyways, Powell was saying that the Fed is committed to fighting inflation. This could be interpreted in many different ways, but in my opinion, that's very essential and it's very telling, right? He also mentioned that the labor force participation rate is still high despite the decreasing jobs data. It's still higher than expected. That's not a good sign for the markets because the Fed wants pain in the jobs market, unfortunately, to start bringing down demand, which will bring down inflation, because pain for the short term is necessary. It's a trade-off. If it means that for the long term, we have lower inflation and we end up bringing it down and we improve things. But there's a cost to this, and that's what Powell is basically talking about. This is basically an indication that they do have a tendency of being prepared for more potential downside because of that and being more aggressive. Powell mentioned that the war involving Russia and Ukraine did lead to inflation going up, adding more upwards pressure to it, and that without price stability, there will be no sustained labor market. So that's why it's very important for them to look over that. He mentioned that they will most likely see more restrictive policy changes. Given the fact that inflation is still high, they just raised rates by 75 basis points, and they will reduce the size of their balance sheet, and more increases are still appropriate. Once again, they're not pivoting yet, like I mentioned yesterday. Now, the real question was, were they getting ready to pivot? And there's no indication of that. But the bottom line is, with all the articles coming out, I even mentioned this yesterday, there was no sign of them truly pivoting, meaning they decreased rates yet. And that's not what we're seeing. He also mentioned the fact that housing is going to be affected more slowly. It's not going to happen as quickly. And there is still lots of uncertainty involving the data. Now, going down to one of his most important claims, he mentioned that forceful steps are needed to moderate demand. So that's some hawkish language by Powell right over there. They are ready to be forceful. He mentioned that when it comes to December, they are uncertain about what they're going to do about their policies. We don't know if they're going to start reducing the rate hike, giving us like 50 basis points or 75. It's going to depend on the data. But he did mention that the latest CPI report that's coming out is likely not going to be that great. He mentioned that. So that's not a great sign for December. Right. He also mentioned the fact that they're not going to be like more aggressive in a way. And I think that he didn't necessarily mean it in the right context, but he meant that they're not going to try to be too aggressive, right? It's very important for them to be very careful with how they raise these rates. And he mentioned that for December, they might start decreasing rates, but there's no certainty. And it may happen maybe like around January, February, later on into like 2023. He just said it's a possibility. There's no confirmation of this, and the market does not like that. He also mentioned that they need more accurate inflationary measures. In his opinion, inflation is a stationary object that moves gradually. So it's going to be a very, very slow change here and there. He also mentioned that the Fed has been quite aggressive, but they need to use their tools forcefully and thoughtfully. So, once again, more hawkish language from Powell, really showing us his place and how committed he and the Fed are to fighting inflation. He also mentioned there's not a whole lot of data involving inflation at this high rates given the circumstances. That is true, but there are other things to remember. And this is where things become very serious. Let me highlight this just to make this as clear as possible. This is one of the biggest points he made. He mentioned that we may change our target rate to higher than September levels, but it isn't certain. So, once again, he's basically hinting that there's a chance they're going to be even more aggressive, but they simultaneously don't want to over tighten on policy, right? Two important things right over there. He also mentioned that it's premature to think of pausing on rate hikes. So there's no pivot right now, guys. I even mentioned this yesterday. I didn't see them pivoting. There was a chance that they would maybe like get ready to start pivoting by maybe not being as aggressive in December. But right now, there's no confirmation of this, and there's no pivot right now, which is not good for the markets, at least for the short term, when it comes to us pushing up. Now, he mentioned other things about housing, that the labor market is still strong, and finally, that nobody knows if there will be a recession. So this should be an if. Nobody knows if there will be a recession, according to Powell. I found that quite comical. I found that pretty funny because we basically were already in one and we are probably still in one. But, anyways, guys, when you see Powell basically not giving us much certainty, not answering a lot of questions, and the fact that his language was more hawkish overall, it's not the best of signs for the markets, to be frank with you. Now, does this mean we're just going to crash instantly? I don't think it's going to happen like that, but there is some more potential for downside because of the trend we just saw. If you look at SPY, all right, the whole market was following this pattern, the big push up into FOMC, followed by the big rejection and drop as Powell was talking. When we look at this, all right, I want to talk about something. We were coming down pretty hard and we continued to drop. We retested this 378 to 380 zone. This was a very key zone on SPY. I mentioned this yesterday, right here. And we actually just shot below it and we ended up closing around that 374 zone. So there is possibility, there's a good possibility there's going to be more downside to come. We could see SPY hit 372 to 370. Now, one thing that concerns me about the tech sector is the tech was lagging behind compared to the overall market. If you compare like the QQQ and Tesla compared to the market for most of the last month. But if we look at, let me find the QQQ, there's something that concerns me. If I go on the 2 hour time frame, there's this giant gap down here around this like 261 zone. We are a little bit red in the after hours and we actually broke below our support at 266.93 on the QQQ. This means that the Nasdaq will likely have more potential downside. The Nasdaq's likely going to keep coming down if we break below 264. We need to try to hold 264 first. This is the next like support zone, 264.75. We gotta hold that. If we don't hold that, the Nasdaq's likely going to come down pretty hard. And if the QQQ and Nasdaq come down, it's not going to be the best of signs for Tesla. Now, from the Nasdaq itself, a very similar trend. There's obviously this big gap right here, but we have some support to hold us off beforehand. If that doesn't hold, this 10,500 level, we're likely going to continue to come down. Looking at something else that's interesting real quick, let me just go over a couple more things before I talk about Tesla. On Apple, where is it? I think I had it somewhere here. On Apple, I mentioned earlier that there's this big gap right here. We ended up filling the gap, but if we don't hold 145, we have potential to come and retest 142. And if that doesn't hold, right, 140 flat can be retested. We also have another gap down here at 138. I'm not saying we're going to go that low just yet. There's no confirmation of it just yet, but more downside still seems very possible, especially if you look at like the daily candle on Apple. Once again, this does not look very good. It looks like we're on the verge of seeing the bears take over. So, what does this all mean for Tesla? All right, here's the good stuff. Where's Tesla? What is this thing doing? Well, I mentioned to everyone that if we got big confirmation, if we got a big push, the market would likely push up, and that could have helped Tesla. But Powell being aggressive, talking about many uncertain things, I think the market needs a little bit more time to kind of like take in what he said, which is why I don't see us necessarily getting a huge bounce just yet, but to me, it's looking like Tesla just broke another support zone around that 215 level. So that's not the best of signs. This is an indication that Tesla is likely going to continue to come down because people are still kind of like taking this in. Some panic is coming into the markets, and we are going to see a continuation that's kind of bearish, unfortunately. Do I think we're just going to crash to like the 198 range instantly? I don't think so, guys. I do think Tesla's going to have a slight bounce before that, but until then, I do believe we have to watch support zones where Tesla could likely go to. Now, if we zoom out on the charts, I'm noticing that the next key zone to watch for would be this 209 zone right here. I want to see how Tesla reacts to that because if we don't hold that, then 205 is a pivotal zone, not to mention 202 to 200 flat. So for the time being for tomorrow, I mean, it really depends on how the market reacts. I still believe there's more room for selling, but once again, we are kind of oversold, so you can argue that we're set for a small balance. But I'm just very, very careful, guys. What I'm thinking is we could gap down a little bit tomorrow. So maybe we end up opening around like 12 to 11, maybe around there. And where we move depends on the market. We might see Tesla try to hold 211 for some time, but I wouldn't be surprised if this thing slowly kind of comes down and retest 209. We're going to try to hold it. If that doesn't hold us, 205 is possible to be retested. I want to see Tesla hold this. This is a very, very key zone on Tesla. If the market gets a nice bounce, it could actually hold up pretty well, retest like 211, then come down again. But if that's not the case, we could end up continuing to come down pretty hard, guys. Watch that 202 to 200 zone. We have strong support at 200, right around this zone. If we break below 205, it's very possible for us to get there. Now, I don't like to be like a person that talks about us just crashing instantly or like very fast. So it may require a little bit of time to actually get there. So I'm hoping that we hold at least 205. If that's not the case, there's a risk of us retesting 202 to 200 flat. So be very careful, my fellow Tesla investors and traders. Be very, very cautious with what you're watching and how the trends look. But like I said, I'm going to be watching for 205 for tomorrow, and I'm very, very careful because of what Powell said. Now, I do believe that we're still uncertain about lots of things, so it's not necessarily the end of the world. But simultaneously, like I said, you have to be very careful with this. If we get a bounce tomorrow, which I think is pretty unlikely, to get like a big bounce and turn very green, we have resistance at 215, followed by 220 and 221, and then 226. Now, I don't really see Tesla rallying that hard after what Powell said. Like I mentioned, I just want to kind of like inform you guys about resistance levels. If we break below, watch 211. We have to try to hold that. If not, we have some support at 209. It's not extremely strong. And if that breaks, then 205 is likely going to be retested. Now, it's just a matter of can we actually hold 205? Because we do have some pretty decent support right there. Break below that, we see the 204s being like retested, and the trend is pretty bearish, and we see lots of like bearish volume. We could easily see this thing retest the 202 to 200 range right here, and hopefully we hold 200 because we have strong support right over here. So watch these zones very, very carefully, guys. I know it's kind of scary to see this, but it is what it is, right? On a very shorter time frame, right, we turn pretty bearish, but on the longer time frames, like the 2-hour time frame, for example, we could see right here The MACD is still wide open. The RSI is still approaching that oversold territory. It's not fully oversold, which is a sign that there is more potential downside. And on top of that, if we look at the EMAs, they are actually starting to diverge a bit right here. They're starting to spread out more, which is often a sign that we have more kind of like bearish momentum kind of taking over in the charts. On the 1 hour time frame, same thing, everything is wide open. But on a bigger time frame, such as the daily, let me see what we see here. On the daily, we have a very bearish engulfing candle. So it's looking like right here, the MACD is kind of closing up and the RSI is continuing to come down on the daily. So this is looking like it has more room to come down and the MACD might flip, leading to more bearish momentum on this stock. Now, we may be green in the after hours completely fine, but the overall market will affect Tesla's performance. So I really advise you guys to be very, very careful. And the non-financial advice, by the way, that was a slip up. But anyways, you get my point. Be very careful with this stock. There could be more potential downside. I would be very careful and be ready for anything for tomorrow. Thank you all for listening. Have a great rest of the day, and I'll see you guys in the next one. The video was kind of rushed. I wanted to get this information out there as soon as possible because Powell said important things. And have a great day. Tesla to the moon because the long-term future is still incredibly bright with what's going on in Texas and Berlin and their big expansions and their big deliveries and new models. I'm still very bullish, but for the short term, there may be some pain. Thank you and peace out.